Hello traders, Gary Wagner here. It is approximately 11:15 in Honolulu, 4:15 in New York City on Wednesday, the 22nd day of February 2012, and this is the daily report for gold and silver. We have another nice showing today. Second day in a row, we're seeing substantially higher prices in the precious metals markets, up over $17 currently in gold. As you can see, current print, $17.77. We have silver not really doing all that much, though, today, $34.35. Somewhere in that area, putting it up a couple of cents on the day to unchanged. Very quiet in silver. We have platinum up $36, palladium up $10 on the day. Traders, the first chart that I do want to take a look at today is our gold chart, daily gold chart, classic candlestick format. We touched on this a little bit yesterday, and we definitely talked about this over the last couple of weeks, but whether you want to call this a triangle breakout, which looks something like this, or whether we look at it as a flat bottom, ascending top, which would look like this, one thing seems quite evident to me, and that is when you get a series of lower highs, which is indicative right in this area, and then higher lows, meaning that compression, once you reach the apex, you tend to get a sizable release of energy, and the market tends to move briskly in the prominent direction of the trend. There can be no better example of that than what we have experienced over the last few days. We talked about this last week, that as this market consolidated, it was building pressure, and that pressure would be released once it reached the apex. We absolutely got that. The other thing that I'm noting on today's trading activity is really where we have our current print at, roughly 1777. As you can see from the resistance areas that we have been charting and kind of looking for ahead of time, there also can really be no doubt that the market has gone to this particular area, and at least on a tentative basis, at least for now, is definitely finding a little bit of resistance. Now, traders, we are looking at a 720-minute candlestick chart. And on the candlestick chart, you can really see how over this last half day, this current candle here, we really had the market accelerate. I truly believe that the wave count that we have been working with has been pretty accurate. I really believe we're looking at waves 1, 2. This was our third wave. We had this triangle or flat bottom descending top conclude 4 right in here, and therefore my sentiment is that we are currently in wave 5. And in terms of target areas for wave 5, I still believe my first target area is somewhere around over 1800, 1814. Second target area should be around 1850. Now, a fifth wave does not have to be the largest and can in fact be the smallest of any of the Elliott waves in terms of the impulse cycle itself. However, it has been my experience in gold that wave 5 has typically been the strongest of the waves. So, that being said, we could see this market move substantially above 1850, but first steps first. Let's see how it reacts in this one resistance area that we plotted on our last chart. We can see that there is some resistance and see where the market wants to move from there. Lastly, let's look at silver. Now, silver has been lackluster today, and it absolutely holds some fundamental rationale for that, in that you've got stocks falling for the second day in a row. You have reports which surfaced today, which have fueled the gold market, with some genuine concerns about the European, but more importantly, the Chinese economy having slower growth than expected. That activity because of the fact that silver is a highly used industrial metal, is going to weigh heavily on that and give it a bearish emphasis in terms of the market moves themselves, and so you're really not seeing it move in the same way that gold is. That's today. However, I still believe in terms of my target, I still believe we can achieve $35 an ounce. We're in at $28 an ounce. That's going to be a $7 gain for our first trade of the year in silver. I'm excited about that. 1580 long in gold. And that market is now approaching a $200 profit for us. I'm real excited about that as our first trade. Now, typically this trade, we're now into the latter portion or the last part of the second month of the year. We entered the trade on the 2nd. Traders who have not entered the trade or have entered and exits, I am recommending that you buy pullbacks and buy breakouts because I truly believe there is more room to the upside. So for my subscribers that are looking to reposition themselves in the markets, go ahead, feel comfortable buying the breakouts and buying the dips. And then lastly, for those that have multiple tiers, you can look to add another tier at this point. Even for those who have single tiers, you can look to add another tier. Base it on a dip if possible, a breakout if necessary. This has been Gary Wagner, wishing you as always good trading. We'll talk to you tomorrow on Thursday for another daily update and review. Bye-bye.